Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. It's Monday. Um, today's video, I'm just gonna kind of go straight through. The markets are kind of flat today because of the debt ceiling crisis. You know, on again, off again, like a bad relationship. We got Biden and we have Biden and Speaker McCarthy are meeting this afternoon. They're meeting right now at the White House, right? Of course, this weekend was filled with on again, off again talks between the Dems and the reps. And they're going to battle this thing out. And they're going to do what they're going to do. They're going to do what they normally do. They'll probably do a quick fix, band aid, just extend it, but not fix the problem. And then we'll be dealing with this yet again if they can't come to an agreement. But the stock market, in all honesty, hasn't reacted negatively to this like it did in 2011. It hasn't as of yet. And so I did a lot of videos talking about how we can be prepared, suggesting or pointing into what I would do. Remember, anything I say is not a suggestion for you to buy, hold, or sell. And so we shall see what comes out of it. I expect it to be a pretty volatile week. And as things progress worse towards the end of the month, the closer we get towards the end of the month, I expect the market could react accordingly, more aggressively, or probably more violently would be a bigger swings. Okay, so if you're investing or swing trading based on day to day of the decisions or the talks, man, you're really brave. I would not be doing that in this session, in this season, because Janet Yellen was a definite by saying next month is the deadline. Now, some says the first, some say by the 15th. It's just a period of time when we will run out of cash. Okay, so or credit, should I say? It's not cash; it's credit. Everything that we do here in America is on credit. We're part of the cavalry. Charge. Time to pay the bill. Nah, just raise the credit limit. We don't have to pay any bills. All right? Okay. Unlike you and I. All right. So let's see what else is going on in the news today. And I'm going to try to keep this one short. We got DraftKings. Look at this. DraftKings is killing it today. Look at this. Today, DraftKings is up 6%. If you look at the last month, DraftKings is up 19%. If you look at year to date, DraftKings have just been silently killing it, up 131%. So now these small cap stocks, some call them small cap growth stocks, are just quietly doing their thing. There's a reason why I'm talking about this. Let's look at other companies. Let's compare that to Palantir, which is also killing it. Palantir, which is also killing it year to date. Look at that. Just killing it. All right. So, yes, we have look at this. Nvidia's up 118%. And we have Tesla up 75%, let's say. Right. But these small caps are killing it. Tilray is not. All right. We know what that is. All right. You weed heads, you guys know what that is. But the reason why I'm talking about these small cap stocks is because of a question I was asked. Larry, why are you DCAing in the dollar cost averaging? And you think that there is a bigger drop coming, right? There's a bigger drop coming, right? So let's look at what's going on right here. S&P is 42, that magical number, 4,200, which is pretty good for the S&P. Everything else, I would say this is a pretty flat day. Look at that. S&P up 8 points, Dow is down 81 points, NASDAQ is up 82 points, all right? But I would say this is a pretty flat day, but the S&P at 4,200, it just keeps showing signs of strength. The market is showing strength, even with everything that's against it. And so the reason why I want to make this video today is I just want you guys to let me just talk with you guys for a minute, because for a lot of new investors, meaning if you've been investing since 2020, it could be very, very difficult to navigate waters like this. So there's a reason why I DCA in the stock that I do, but I still have cash. And it could be confusing. And so no one knows the bottom, no one knows the top. I constantly discuss the lows of October, right? If you go to the S&P 500, you'll see the lows of October. As a matter of fact, let's look at this, right? Let's try to make some sense out of this. And I really wanted to help somebody here. Okay, let's take that out and that out. Okay, so this is S&P 500. Okay, good people. Let's just go to the October lows. Let's just take that out. All right, here you can clearly see that this is the October lows. Let me blow that up. One more. All right, so we can clearly see, once we go back to a year, that these are the October lows. And so a lot of people are saying, okay, that was the low. We missed it. That was it. You should have just piled up right here, right? No one knows if, in fact, that was the low, or, have we missed that low, right? Remember, I suggest to stop saying we missed the bottom. That's what I suggest. I suggest to not look for the bottom. I suggest that you get your long-term portfolios or your long-term strategy in place together now. So here's what I'm doing. I'm not suggesting to you it's what you do. Here's what I am doing and have been doing, and there's a lot of people following, okay? This time I will leave a link here in this box for those of you that don't know about the Larry Jones $5 a day challenge, okay? Now, the stock that I use in that challenge are just samples for you. It is not to say you are limited to those stock, or those stock are the exact same ones you should. So I have an ETF portfolio, right? I have a growth portfolio. I have a blue chip portfolio, those type of things, okay? And I have a array of stock in different sectors, all into these 3 portfolios, right? But I've been $5 a day in, and when I say $5 a day, it means as much as you can afford. Some people are doing $100 a day. If you got it like that, whatever. Find a company you believe in that's going to be good for the next 5, 7, 10 years, and just invest in those, okay? Now, what I'm doing is I'm investing in all of those companies. I think it's like 18 to 20 companies. And I'm investing in them incrementally every week and in small amounts, right? But what I do is when I see opportunities where I could get in, like a DraftKings, and make some money and get out, those are the ones that I swing trade. And no, I did not swing this. I did not swing DraftKings. Wish I had. Wish I had loaded up at the beginning of the year, and I would have been up 130% on DraftKings. You guys see that? Wish I had, but I didn't. Sometimes it is good. This is what I do, to dollar cost average in one portfolio and swing trade in another portfolio the same stock. And that's what I do with stocks and crypto. You guys that follow me know that's what I did with all of my crypto, you name it, right? That's what I did. I swung it and I DCA'd at the same time, right? So let's look at, where is that at? Let's look at, here, let's do this. Okay, there we go. So there's where we are with crypto right now at this point, right? So you guys could see that Bitcoin is at 26. You can see everything else. Those are just some of the popular cryptos, right? And I just wanted to show you guys that there is a range that you could be swing trading Bitcoin, right? But since we are in the accumulation phase of crypto, then have another portfolio where you're simply accumulating, where you buy a little every time you get paid, whether that's weekly, bi-monthly, or monthly. Follow? And then that way you are taking profits in your swings, but you're also DCAing because no one knows where the top is and no one knows where the bottom is. Now, I will tell you, everybody has a different route to wealth, right? And someone else may have a totally different way of, building their wealth, right? And it works. But I can tell you what I'm doing for me, it works. But Larry, what are you going to do with your 85% cash? If the market legs down, I'm going to be brave and I'm going to buy. I am of the old school when it comes to especially blue chip big companies. I am of the old school of temperament. Okay. I'm going to be patient. I'm going to continue to DCA now, and then I'm going to buy big in another portfolio. But my portfolio that I'm dollar cost averaging in, my DCAing in, I'm going to double down if we have another leg down in the market. If the S&P drops beneath 35, okay, let's go back to that. All right, if the S&P drops beneath 35, then here we go. If it drops beneath that, then I'm going to double down. Follow? And hey, Larry, what happens if it drops even again? Then I'm going to double down yet again because I have enough cash to do that in my portfolios. So I want you guys to get a plan together and not just wait. Just like I showed you week before last, to have a plan just in case the Dems and the reps mess up this debt ceiling. It could be a fiery sale, just like in 2011 when you had pretty much one day to buy, and it shot back up. Okay, so that's what I wanted to make this video about today on this day, which is mostly flat. All right, good people, listen, it is it's Moo Moo Monday. Weeble's Wednesday. Moo Moo Monday. Go ahead and get your free stock, good people. Make that deposit right now. Get your free stock, at least 10 free stock with a minimum of $100, okay? Get that. And if you want Weeble, and I'm going to be doing some things with Weeble, then deposit $1 and get up to 12 free stock, okay? But make those deposits today. I will see you guys tomorrow. We're going to leave it right there. Live, love, laugh, and learn. Let me know if I've shined a light on anything to help you guys. Peace.